Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for February 4th, 2023. All right, we got a lot to go over because the market is getting much more interesting than it has been for a long time. So let's get started right away. As usual, we're going to talk about the current market environment. We'll go over the stocks in our portfolio and then the stocks in our watch and ready lists. Okay, so we're still on the stock environment indicator is still at yellow, and we're still looking at the best strategy is short-term swing trading. And this week we did up our recommended exposure to 35%. So we are increasing slowly, but what's sort of happening here? The money in the market, in the index, we're getting a really big rally. We're almost in a bull market in the NASDAQ. We're almost up 20% from its lows. So really, really crazy trading going on in the beaten down names. Now in this service, we don't deal with those names. We're always looking for the leading stocks. And the difference is a lot of these stocks that were former leaders, let's talk about Atlassian or the Trade Desk or, even Microsoft, Facebook or Meta. Apple, many of these stocks or ServiceNow, HubSpot, there's Appfolio, there's just hundreds of names. Many of those names are in major downtrends. The 200-day is just going straight down, or in some cases maybe it's a little bit above that. But we're on downtrends. They're closer to making new lows than highs. They really just got beaten up. Tons of overhead resistance, and just not the kind of stocks we look for. Because where's the bottom? Where do you buy these? And they could keep going down, and that's what got people into so much trouble last year. They kept buying these leaders because they were leaders at the time, and they went up just tremendously. But every dip was bought, and there were 4, 5, 6, 7 dips that kept going down and cost so many traders untold grief and loss of their capital. So we don't look at that. We're looking for the stocks that are during a bear market are making new highs and or at or near new highs. That could be 52-week highs. It could be all-time highs. So those are the leaders. Now, some of those stocks, especially in a bear market, you will get some of the defensive names like Clorox and Hershey's, or even sometimes like Tootsie Roll. You see these stocks breaking out because they're defensive names. We saw that with chemicals. But okay, so those are some of the ones, and those are maybe more tradable. You're not going to hold them for forever, maybe, depending on what you're looking for. But more recently, we're starting to see more of the traditional tech names or growth names. A few of them that have started to appear on our lists that are not defensive names, and they're been coming up. Now, those could be some of the next big winners of the future. But we don't know. Of course, this is all coming in the future. But so those are the stocks we're looking for. Now, we're getting, positive action from leading stocks. And I'm going to show you sort of my bigger list in a little bit. But there's still too much volatility, and we're just, the post-breakout action is still kind of iffy. There are just not a lot of stocks that have gone up even 10%. A lot of them seem to be stuck up, 2, 3, 4%. You can see that in our own positions. Or there's still a good number that are just breaking down and stop you out. We had that with Chevron because the oil sector was very strong, and that just had their earnings. So we're just not getting that action we want to see that gives us that easy dollar environment. We're not there yet. We're making move towards it, but we're just not there yet. So we're still keeping our exposure light and not getting overexposed. And of course, the money is really just flowing into these beaten down stocks, and there's a lot of rotation still going on. You see it. As soon as money's piling back into Apple and Tesla and HubSpot and all these names, you see it coming out of the other names. So it's tricky. It's a very difficult environment to navigate, which sort of leads me to believe we still are in a bear market, which we technically are. Even the NASDAQ is almost out of it, but it doesn't. That's just a technical thing. Up 20% bull market. But if the stocks are not acting correct, you have to give that more weight than just some technical level that now calls it a bull market or a bear market. So we're getting close. So let's take a look at, I have a lot of stocks to go through, so I'm not going to go through our open positions. But so one of the concerns here, you can see a little black box, is we have one clear winner, Credo. Now again, it's a tech stock, so it's one of the few sort of growth names that it broke out and is actually acting pretty well. And we bought it at 1560. It's at 1821. We did sell part of the position because the theme for over a year was pop and drop or pump and dump. And so as soon as you got up, a stock went up 8, 9, 10, 11%, 12%. That was it. Sometimes it happened in a day. Sometimes it happened in 2-3 days. But within a week, almost always you lost that gain and down it went and stopped you out. So we just, because we don't know and that theme hasn't changed completely, it could be in the middle of changing. So we took off half of the position. I forget, we were probably up 10 or 11%, 12%. And now we're holding the rest of it for the bigger move. So, and we've now moved our stop up for that one to break even. So no matter what happens, if this came all the way back down, we'd end up with a win-in trade. So we have no risk in this one. But the rest of our names, we're slightly down on 4 of them. And, sorry, I'm looking at the wrong one. We're slightly down on 3 of them and up a little bit on Diamond Offshore. So we're not getting, now of course 2 of these are oil names, which suddenly it's not acting all that great. We do have one ETF. It's been kind of floating up and down between positive and negative. And this was a new one we just put on, and of course went negative a little bit. So we're not getting, so what is this telling us? This is the feedback that until we start getting a lot of gains build up, we don't go in and keep piling in and adding more and more positions, because that's what happens if you're doing it incorrectly. You end up with 100% invested with all these names, or even a few names, but you have 20% positions or whatever you're doing. We tend to take 10% positions as sort of our core. Sometimes we do halves, but you don't want to be loaded up in a poor market. You're not getting the gains and you're just now putting on a lot of risk, and then the market turns around and then suddenly you got massive losses all coming across every single stock, and your portfolio is going down 6, 7, 8, 9, 10 and beyond. So you don't want to do that. That's not the way that's the proper way to trade. Okay, so that's the basic market. We're still waiting and watching, waiting for the best environment to improve. So what I want to do, just going back to that theme, I don't want to keep this video on too long, but this is part of my greater watch list. I have a few of them, but these are some of I've been tracking the post breakouts. So these are stocks that broke out. I mean, we may own 1 or 2 of these. We may have owned and got stopped out, but these are ones that just, some of them, now let me back up a little bit. I always try to find the best stocks at the time to put on the list. Now, some of these had not been really set up properly, or they just blasted out of some thing, or they gapped up. So that's why you don't see all these names that have been actually acting pretty well. Some you have, some you haven't. So that's why. And the ones that are setting up properly, that's the ones that we're putting on the list. But you can see here, I'll just kind of scroll through a few of them. For example, this one, I don't remember. We might have had this as a lower buy here, but then it just went. So, but you can see this one's acting okay. This one completely broke down from its buy level. All the red lines are kind of like where we're putting in a buy level. So you can see this one kind of floated around here and finally broke out, but that one just failed. This one was a tricky one. I think I traded this myself and I got stopped out eventually, I think on this day, because we were up a good 10% and then it came all the way back down during the day. That one's acting okay. This one broke down. See, you can start seeing that one's holding up, but again, not much of a gain. Texas Roadhouse has come back to its buy point. This one holding up okay. This one broke out below. This one's back below. That one's again, but these moves are just not much. Here's another one, just hasn't really done much. Here's Credo that we own. We bought it acting well, a lot of good days. So that's one of the winners. This one's below. This one's not really doing much. That one broke down. This one definitely broke down. Tried to break down that day and just failed. This one's acting well. So I'm just kind of give you an idea. That one broke down. This was on our list. Hess, the XLE. That's the whole. That one's also come back down. A few of them, but really not a lot of big moves. So, and a few breakouts that just happened. But again, like this one, we didn't really have it because it just kind of gapped out. Even if it's a small gap, we tend not to chase those. And that was also, there's a lot of these are coming on earnings too. And we don't want to trade and hold stuff in front of earnings. So that was an earnings move, and it gapped up and went out. Okay, so let's go back to, let's go to the stocks on our watch list. So the first one is Waterdrop. Now this one is it's a $3 stock. It is not a quality name. If you don't trade this one, no big deal. But it's actually trading nice and tight, and it really made a nice move up already. And the earnings it's got some pretty strong earnings, even though they're low numbers, but not bad. Not much in sales. The margins are okay. But again, this is a third-party insurance and healthcare service company in China. But this is a nice setup going here that's tight, and we'd be buying it if it breaks out above the 330 level. Okay, so next one is Sigma Lithium, SGML. Now this one looked like it was trying to break out. It actually popped up, I think, onto our ready list for one day, and then we had a big breakdown back down to this 50-day, which is the red line. So we're back on the watch list on this one. Not a little bit higher volume we'd like. Now this was a very good day. High volume, little breakout, just closed right at the top of that. It looked like it should have gone, and it didn't. And we went down almost 7%. So this is what we're seeing more and more. That not a great sign. In a great market, these breakouts would just go. This would just keep going and never look back. Next one, Maxion Solar Tech. Again, tried to come out, got pulled down, and then we came back down. So we're looking to get this right above, breaking above this 2302 area. So we're just watching this. It's still doing really nothing wrong. You can see it's kind of coming down, kind of tightening up. Ideally, this would even come back up to between 2375 and 2425 and tighten up there, and then break out. Be a little more constructive, but it's a pretty good sized base, and it's looking pretty good. This is just one we're watching. Also, you can see here there's the new CEO. Sometimes when you see there's in IBD's CanSlim method, the N is actually for new, and the new could be a new product, new service, new various new things, and one of them could be just new leadership or new CEO. So this could be a trigger that whoever is running the show now could turn the whole thing around. So we'll still watch that one. Next one is Amcor Technology. So one thing I want you to notice, so far we're getting lots of different names now. We're not just getting the chemicals and the defensive names. We have here semiconductor packaging companies. We have lithium mining. We have optical products. We have Wilcott Mobile Mini coming up. Biotech. So the leadership is expanding. So that's a very good sign for the market. Here, we're getting a little bit too much volatility here, so we're still watching this one. We don't like the fact it tried to break out, it's come back. A little bit of a wide. See, we like this kind of trading, even though this is a downtrend. But even here, when we started going up, we had just nice tighter trading. This a lot of indecision going on. So we're just going to watch that one. But it looks very promising. Next one is Inspire Medical Systems, INSP. This one, they develop solutions for sleep apnea. And again, we've kind of come up. We've actually formed, this is actually in the way, I don't want to move it because I have to change my screen view here. But you can see here, even though it shows here we have a little flat base, we actually have a kind of a bigger cup. Let's see if I can go to the weekly here. Yeah, you can see here we have sort of a bigger cup that's forming here. And then we've kind of tightened up here. So it's really looking pretty good. Now this one's got earnings in 3 days, so got to be a little wary of this. But it's tightening up. Maybe when we just see what happens on earnings. But that's when we're watching. Next one is WillScot Mobile Mini. This was a merger of two sort of portable storage and storage space places. And this one kind of tightening up here, forming a little handle. We're watching that one on the breakout. The XLB, this is one that we actually own, but it came back down. We bought it, coming out of this little area here and just has pulled back. It's not doing anything wrong. Volume's a little high on the sell-offs, but nothing super warning yet. If we start getting more down days and then breaking below the 21, that's the green line, and the 50, we might exit part of the position or all of it if it's not acting well. But so far, this is just normal. It's of course, we'd like it to just keep going, but that's what we'd like, not what the market actually does. So, but this is one we're in. Because of an ETF, you sometimes have the RS ratings that are not super high. So that's not a concern. We'd like it higher, but the fact that it's starting to trend down is also a little warning there. But if we can, we try to get in some ETFs so there's not so much individual stock risk all the time. Okay, next one is Bausch & Lomb. Ticker is BLCO. Now this is interesting. It's a recent IPO. You can see it just started trading and didn't have, I could show you a lot of IPO charts that they're up here and they just go straight down. And then they're down 90%, 80%. This one is actually very close to its highs. We're just, in fact, I can actually tell you, we are only 15%, 14.4% from its 52-week high, which was almost at 20. So that was typical. They open and then they go straight down after that. So this is, and we've bought it coming out of this little, again, it's kind of like a little cup with handle, a little bit of choppy trading here. It broke out, kind of came back in, and then we actually picked it up on, again, another move above, but it unfortunately closed at its lows, right at the 10-day. It's acting fine. We still got 18 days till earnings. So we'll see what happens with that one. And then we finally have a new one we just added. It's the IBB. It's the ETF for the NASDAQ Biotech. And a lot of biotechs have been breaking out recently and acting really pretty well. So this is and I don't particularly like investing in, especially any kind of big positions. They live and die, these biotechs, by FDA approvals or disapprovals, and not so much the earnings. And those can just be fantastic or deadly, not uncommon to have 40% gaps either way or more. So that's one that if we trade these, we always take just smaller positions so you don't have that risk. So, but doing the actual ETF is actually, and it can move. This thing can really make big moves. So it's not like you invest in it and you get 10%. You can get 50% out of these, some of these, especially like the SOX to the semiconductor ETF. It can make big moves, and it's almost preferable than the little individual names, which are almost always losing money. So this one, we're trying to buy it breaking out of this. Okay, this little cup, little handle there. Our long-term outperformer watch list. I'm going to do some more screening this weekend. We haven't been finding a lot. A lot of these names that were on there traditionally, they're now kind of the former broken leaders. A few of them are starting to set up. And I'll be screening and see if I can get some names on there. Let's go to our that was our watch list. Yeah, so let's go to the ready list. I usually start with that. I was on the wrong screen there. Okay, so the first one is Bel Fuse. This is one, it's been acting really, really well. I know we've had this on our on the servers a couple times. I found this is very hard to buy this. It's a very thin stock. It only trades 66,000 shares a day. It's acting really, really well and nice trading, but I've tried to buy it and I can't get filled. I don't know what it is. you put an order in and it like, doesn't get filled. So, but it's acting really well in this sector. The electronic parts companies that make transformers and converters and things like that, they're all seem to be doing really well. So we're back on this one. We're in the buy range, which was coming out of this little area here. We're at the top of sort of the range is 37.75 to 40.40. Just kind of keeping it within a few percent of the buy range of the buy point. It is buyable. Earnings are not for a while till the 24th. We're getting really strong earnings too. Look at these triple digit moves and strong sales. So you can see something going on there with this company. But in fact, sometimes people say if you have a hard time buying the stock, it's usually one of the better winners. It's like just the sellers don't want to give up their shares. So, but this one just doesn't have a lot of volume. So you have to be careful. This is not one you want to have a big position in because when it goes ugly, it can just suddenly have no bids, or you just can't get out of your shares because there's nothing offered. Okay, the next one is Genie Energy, ticker is GNE. This one broke out here. You can see we sort of had this a lot more volatility, kind of tightened up. Then finally, it looked like it was going to go here. This was looking really good. I think we might have had it on our list. It didn't, and it failed, broke down, and then kind of formed this sort of lower, something to call it a cheat, and then it just blasted off. Sometimes in the markets, it doesn't make it easy for you because when you think it's going to go, and then you think, oh, that's the end of that, and then it just comes ripping back. That's very common. We've seen that a lot, and a nice volume too. So this was buyable on this one day. We're in the buy range, which goes up to 11. We're right at the top of it, actually. I think when I updated it, it didn't have the final price. So we're really kind of right there. I'd be kind of watching it and waiting. It's also just, it's $11 stock. It's not really, and it's a thinner stock too. So it's not the best of names, but we put on what looks, but it's so far it'd be having a decent move. Okay, Diamond Offshore. This is one that we do have on our portfolio. RS is good, 96. It's just the more ideal time would be have bought it here, but you can see it just like the pop and drop. It popped out, failed, and came ripping straight back. So we bought it coming out of this little high handle thing. So it's acting pretty good. One thing we do like about this, you can see here just looking at the annual earnings. They went minus from 2018 to 2021. Really got really ugly. Minus $1 down to minus $20. And then last year came back to just minus 80 cents and projected to go positive. So that's a really good sign that something's turning around there. I think this might have been, I could swear the stock was around a lot longer. It looks like it was more of an IPO. It might have been a buyout and they put it back on. I don't know the story, but it's acting really well, really pretty good. We've actually now made new highs. Let's look at the weekly. So this is that IPO. Again, typical. They come out, they plunge, and this one's come back and now is making a new high. And with earnings, the sales they're growing pretty good. Earnings are still spotty, but of course we've had really some negative numbers. So that's looking pretty good. This could go a long way, and we've got a position in it, and we'll just see what happens. And the final one is Barrett Business Services. This is one that probably nobody's ever heard of. Very thin stock again. Unfortunately, some of the better ones are just thin stock. So again, we're not in that environment where we're getting just the best quality stocks and really just the higher quality ones really going. But this is what we're giving. Again, this is why we're not pouring into the market and putting all our capital to work. This one's actually really pretty good. We got that tight trading again, and we're just about to. It broke out above this little area here. It's been a little volatile, but this is also viable. But again, got to kind of watch it. It's just that low float. And that's it. We don't have anything on the long-term outperformer ready list anymore. We had one. I'll just go quickly. It was CBZ company. Again, most people never heard of it. We were buying it coming out of this little cheat area here, and it has taken off and just moved out past the buy zone. But again, this is kind of sort of a thin stock too. But it's really, if I go back to the monthly chart, it's a nice, this is what we like to see. Just a continual nice uptrend. This was the coronavirus crash, so it really took a hit, but it's looking pretty good for a company. It's a consulting company for something that no one's ever heard of. Is actually really pretty well. Okay, that's it for this week. We'll be back next week and see what happens. Okay, thanks.